if I invested $1,000 every single week and I never missed, I never skipped, that totaled $52,000 over 12 months. Now, during that time, Bitcoin's price over that time was anything but smooth. It started around $69,000. It shot up to $106,000 by January. It crashed all the way back down to $74,000 by April before climbing back to $110,000 by May. But because I kept buying every week, especially through the dip, my average purchase price ended up at $74,286. Now that's way below the peak and even below where Bitcoin is trading today. Now I would have accumulated just over 0.7 Bitcoin, and with Bitcoin now at about $111,000, that stack is worth about $78,000. So $52,000 in, $78,000 out. It's about a 50% return, not by trading, not by timing, but by sticking to the system.
Understanding the cycles that influence the market is more important for generating long-term wealth than following trends or responding to news stories. Entrepreneur and macro strategist Mark Moss explains in this video the robust framework he employs to manage market fluctuations, make confident investments, and safeguard his financial future. Mark has created a method that keeps him ahead of the curve when most investors are caught off guard by concentrating on history, technology, and sound money. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
And if we're being honest, most people aren't just failing at their investing goals, they're failing at all their goals. They say they want to buy the house, take the vacation, maybe finally get the car they've been eyeing, but they're stuck saying maybe next year. And then next year turns into the next, and then it turns into 5. So why does that keep happening? It's not that people aren't smart. It's not that they're lazy. It's that they're doing it all backwards. You see, most people try to force their way to success with willpower and discipline. But real wealth doesn't come from effort. It comes from systems. Systems that fund your goals automatically before you even get a chance to spend the money. What if you didn't have to force success anymore? Like, what if every financial goal, every life goal was already funded the second your income hit the bank? That's what I built. A simple system that I'm going to show you that split and moved every dollar I made before I could touch it. And it looks basically like this. Like, all of the income goes into an account, and I don't spend from that account. Instead, every dollar gets divided into other accounts automatically. 10% into a tax vault, locked, untouchable. But of course, sitting in high interest returns. 40% into funding my living expenses, the house payment, the car payment, etc., right? This is the spending account. Another 40% goes straight into the investment bucket. And the last 10, well, that's the fun, that's the freedom fund. I get in, spend it, and enjoy all that. But here's the key. Every Friday, the system automatically buys Bitcoin. There's no button to push, no emotion involved. It just basically runs. Same with all the other future spending goals. Want to buy a new house? Auto pay for the down payment. Send your kids to college? You want to buy a new car every 3 years or whatever. Each goal becomes a line item in the system. Each goal becomes a line item in the system. It's just there, and it's just building quietly. And at first, it felt weird, like I was sort of cheating the game. But the further you go into this, the more you realize you're just not losing money to randomness. You're not losing money to lifestyle creep anymore. No more like, where did it all go? The money had a mission now, and it got there without me. But here's what I didn't expect. In Q1, the markets crashed, and suddenly I was in the real world stress test. Like, what would happen with the system? Would it hold up? Because I didn't change a thing. And what happened next may surprise you. In January of 2025, Bitcoin touched a high of over $106,000, and by April had dropped all the way down to $74,000. That's a 30% drawdown. Fast. Now, again, I've seen this before, and I knew most people would do what they always do. They're going to panic. They're going to pause their contributions. They'll maybe even sell. Some did. And then they're going to try to wait for certainty. They're going to try to wait for the time when the price is going to move again. But I didn't change a thing. I didn't need to change anything. Every Friday, just like clockwork, the system checked the investment bucket and then it bought more Bitcoin. And that's exactly what it did. Through the entire downturn, March 1st, it bought. March 8th, it bought. April 5th, still buying. And I didn't think about this. No stress, because this wasn't emotion-based. It was rule-based. That's the big difference here. While everyone else tried to guess when the bottom was, my system just kept stacking automatically at some of the best prices of the entire year. And this is what people miss. It's not about timing the market perfectly. It's about being in it consistently when the opportunity shows up. But it's not just about Bitcoin either. You see, every other part of the system kept doing its job. Again, the vacation fund, still growing. The tax vault, still on track. The new real estate investment down payment, it's still climbing. I built this system to remove decision fatigue, emotional reactivity, and the mental drag that comes with uncertainty. And that's exactly what it delivered. So what are the results? Here's where it all added up. After 1 full year of running this system, completely hands-off, I'm using some round example numbers here. Let's just say if I invested $1,000 every single week and I never missed, I never skipped, that totaled $52,000 over 12 months. Now, during that time, Bitcoin's price over that time was anything but smooth. It started around $69,000. It shot up to $106,000 by January. It crashed all the way back down to $74,000 by April before climbing back to $110,000 by May. But because I kept buying every week, especially through the dip, my average purchase price ended up at $74,286. Now that's way below the peak and even below where Bitcoin is trading today. Now I would have accumulated just over 0.7 Bitcoin, and with Bitcoin now at about $111,000, that stack is worth about $78,000. So $52,000 in, $78,000 out. It's about a 50% return, not by trading, not by timing, but by sticking to the system. And I wasn't even thinking about it. That's the whole point. I set the rule once, and then I just let it run. But this wasn't just about growing my Bitcoin stack. Again, this was about funding life, right? This is the Endosurfication fund hit, right? $20,000 goal, done. It booked, paid in advance. The real estate investment fund that I have, sitting at about 65% funded right now. Taxes, of course, that money's holding there. The Freedom Fund, well, it recently paid for a trip to Alaska, guilt-free.
Many claim that they want a better life in order to purchase a home, go on their ideal vacation, or eventually acquire the vehicle of their dreams. Most, however, remain trapped. They rely on willpower rather than a method, not because they are lazy. According to Mark Moss, genuine growth starts when your finances are handled automatically. When revenue reaches your account, it is immediately divided among taxes, bills, savings, and investments without any conscious thought. No stress, no decisions. The work is being done for you by a straightforward, pre-configured system. You can start allocating your income to particular objectives like Bitcoin, real estate, or travel, even if you're only utilizing a few well-organized bank accounts or platforms like Sequence and Relay. Your system continues to steadily and silently increase your riches while others falter or react emotionally. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
So to really see the difference that this system makes, let's compare what I did with what most people actually do. Let's talk about Manual Mike. Mike's smart, and maybe he's too smart. He reads the headlines. He listens to podcasts. He knows how this stuff works. So back in January, when Bitcoin hit 106,000, he said, it's too high. Look how expensive it is. I'm going to wait for the dip. I'm going to wait for a better entry. So then in April, when it dipped, it dropped down to 74,000. He said, oh, but it's crashing. I'm going to wait until it stabilizes. But then by May, is back to 100,000, and now he's back to it's too expensive again, right? That's what most people do. They're waiting for the perfect moment that never seems to come because the perfect moment doesn't feel perfect when it shows up. Now, meanwhile, the system I built, I just kept buying every week, no hesitation, no FOMO, no panic. So let's put the two side by side. Same income, same market, same time period, and completely different outcomes. And the difference, again, wasn't intelligence. It wasn't effort. It was automation. So Mike tried to guess his way to wealth, and I built a system to deliver it. And again, this isn't theory. These are the results. The market gave both of us the same opportunity. One of us showed up every week and bought, and the other, well, waited for the perfect opportunity that never came and missed it. Now, a year after running this, it's completely evident, right? Wealth isn't about grinding harder or getting lucky. It's not about some stock pick. It's just about systems. It's not the guy who works the most hours who wins. It's the person whose money does the most jobs without them. And that's exactly what this system did. While I was living my life, it was stacking Bitcoin, funding my vacations, filling the tax vault. And it filled up the real estate investment bucket, down payment, all automatically, no thinking, no stress. And that's the shift, right? Most people wait for the big break, or they hope they'll figure it out next year. But the people who win, they built the system once. They let it run every day and for the rest of their lives. That's the shortcut. That's the real leverage. And something else, a bonus, all the free time, all the mental capacity that freed up, it helped me focus better, helped me to have less stress, helped me to have more time back. And when time is money, that was a huge bonus.
Mark Moss concludes with a compelling point. The majority of people are not only failing to meet their financial objectives, but also failing to meet all of their goals. It isn't because they lack intelligence or are lazy. Rather, it's because they are attempting to overcome obstacles with their own determination rather than depending on automatic mechanisms. True riches, according to Moss, comes from putting in place systems that remove emotion, stress, and decision-making from the equation rather than from striving harder. That's exactly what he did. He created a straightforward system that automatically divides every dollar he makes as soon as it enters his account into investments, taxes, living expenses, and what he refers to as the Freedom Fund. He doesn't have to time the market, check prices, or respond to any decline because it even includes automated Bitcoin purchases every Friday. Many people sold out, stopped their contributions, or panicked as Bitcoin plummeted 30% in early 2025. Mark, however, did not make any contact. Bitcoin was stacked at some of the highest values of the year as his system continued to buy through the lows. And without attempting to beat the market, his average cost was less than it by the time the price recovered. The approach was effective not only for Bitcoin, but also for all of his other objectives. Taxes, vacation money, real estate savings, and living expenses were all steadily increasing in the background. However, Moss emphasizes the one thing that truly changed: peace of mind. No more questioning the whereabouts of the funds, no more feeling bad about unmet expectations. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.